Imagine a world where you control your own money, free from banks and borders. This is the promise of cryptocurrency, a digital form of money secured by cryptography. Unlike traditional currencies, cryptocurrencies are decentralized, meaning they operate on a global network of computers rather than being controlled by a single entity. Bitcoin, the first cryptocurrency, emerged in 2009. Since then, thousands of cryptocurrencies have been created, each with its unique features and potential. Think of it like the internet in the early days, full of potential, but also uncertainty. This new financial landscape offers exciting opportunities for those willing to learn and adapt. But remember, with great potential comes inherent risks. Cryptocurrency offers several enticing benefits for investors. Firstly, the decentralized nature of cryptocurrencies means they are less susceptible to government interference or manipulation. This can be particularly appealing in countries with unstable economies or strict capital controls. Secondly, cryptocurrencies have the potential for high growth. Bitcoin, for example, has seen astronomical growth since its inception. Early adopters have reaped significant rewards, turning small investments into life-changing sums. Thirdly, blockchain technology, the foundation of cryptocurrencies, enables faster and cheaper transactions compared to traditional financial systems. This can be especially beneficial for international transfers, which often involve high fees and lengthy processing times. However, it's crucial to remember that past performance is not indicative of future results. The cryptocurrency market is highly volatile, and investing always carries inherent risks. While the potential rewards of cryptocurrency investing are undeniable, it's crucial to approach this emerging asset class with a healthy dose of caution. The cryptocurrency market is known for its extreme volatility. Prices can fluctuate wildly in short periods, leading to significant gains and losses. Furthermore, the regulatory landscape surrounding cryptocurrencies is still evolving. Governments worldwide are grappling with how to regulate this new asset class, and changes in regulations can significantly impact the market. Security is another concern. Cryptocurrency exchanges and wallets can be targets for hackers, and losing your digital assets to theft can be devastating. It's essential to choose reputable platforms and implement robust security measures to protect your investments. Finally, it's crucial to remember that investing in cryptocurrencies is not a get-rich-quick scheme. It requires careful research, due diligence, and a long-term perspective. Starting your crypto journey, tips for new investors. If you're considering dipping your toes into the world of cryptocurrency, it's essential to start with a solid foundation. Begin by educating yourself about the basics of blockchain technology and how cryptocurrencies work. Once you have a basic understanding, research different cryptocurrencies and their underlying projects. Look for projects with strong fundamentals, a clear purpose, and a dedicated team. Start small. Don't invest more than you can afford to lose. The cryptocurrency market is highly volatile, and it's crucial to be prepared for potential losses. Choose a reputable cryptocurrency exchange to buy and sell your digital assets. Consider factors such as security, fees, and user experience when selecting an exchange. Remember, investing in cryptocurrency is a journey, not a sprint. Be patient, stay informed, and never stop learning. Ready to explore? Take the first step. The world of cryptocurrency is full of potential and possibility. It's a chance to be part of a financial revolution, to shape the future of money. Like any worthwhile endeavor, it requires knowledge, caution, and a sense of adventure. Are you ready to take the first step? Start your cryptocurrency journey today. Like this post and subscribe to our channel for more insights on navigating the exciting world of digital assets. Your future self might thank you.